Down with us.
Of course.
Let's jump right into the topics our viewers care the most about.
All right.
So you've said you've seen inflation easing. Can you tell me a little bit about where you're seeing it ease and what you expect in the future?
Yeah, I think we got to put it in perspective. Inflation has been incredibly high, and it has persisted much longer than anybody expected. So we are beginning to see those ultra-high rates of inflation moderate, which is a good sign, green shoots as we call it. But we buy a lot of different things, and so it's not the same across every category. Where we're seeing it moderate the most these days is in the proteins that we buy. But it still is inflationary overall for our company, and we are still calling for double-digit inflation for fiscal year 23. So, we have to persevere through this cycle, as we always do, and thus far we're on track.
Are some of your packaging materials going to see lower inflation as well, or is that also still high?
It's still inflationary, but it is moderating a bit, so that's good news. And, these cycles do tend to end, and, we thought it would end sooner and end at a lower rate than it ultimately got to. But we're beginning to see the light now. I don't think we can say the sun has set entirely yet, but it's good to see things moderating. And meanwhile, while we've been faced with all this inflation, we have, helped our customers understand that we do have to take pricing adjustments as a result of the persistent inflation, and so far the consumer has responded well to that.
With moderating inflation, can consumers expect to see lower prices or at least fewer price hikes?
Yeah, I think the one thing that we're nowhere near seeing right now is deflation.
Yeah.
So we're still seeing very high inflation on top of a massive amount of inflation in the year ago period. So that's 2+ years running of significant inflation. You tend not to see pricing rollbacks unless you go into a deflationary period, and that's on nobody's horizon right now. But the pace of our inflation-justified pricing has slowed pretty materially. In our first quarter this year, we took some broad-based pricing in response to the inflation we experienced. We did the same thing in the second quarter. We are taking some actions in this quarter, which is our third quarter, but they're significantly reduced versus what we've taken before. We don't currently have any plans to take additional pricing beyond that. Of course, that could change if we continue to get hit with persistent inflation.
Got it. With retailers who are your main customers, how are they responding to the price hikes? Are they a little bit more resistant to them now?
Well, we make it very clear to our retailers that when we got hit with this super cycle of inflation, our profit margins were temporarily compressed fairly materially. That's a mechanical part of these cycles. And we make it clear equally that is critically important to both of us, us and our retail partners, that we recover that profit margin. Why is that the case? Because the cash flow that we generate with our profit margin is the lifeblood of our innovation programs. And if you look at what matters to our retail customers, they want growth. They want their categories to grow. So if you look at frozen as an example, 8 years ago, the frozen section of the grocery store was declining. It was not growing. Yeah. And the reason for that was there was an absence of innovation in frozen for many years, real quality innovation. We changed that, single-handedly led a transformation of the frozen aisle with high-quality products, high-quality packages, and that innovation drove the category to growth, and nobody was happier with that growth than our retail customers. So to come full circle, our customers understand that for us to keep the innovation machine running and to continue to bring new products to the marketplace that drive the category growth that's so important to them, we have to recover our profit margins, and that means we have to take price. So that's the conversation that takes place, and we are very transparent about the reality of our costs. So they understand we're not taking price to increase profits, we're taking price to recover lost profits due to the inflation.
So they see inflation as well because they have private label. Are they kind of saying, well, we know what the costs are through our private label products, and using that as a pushback for your price increases?
Yeah, it's the pricing conversations are always very transparent. So if it's a single ingredient product, let's say cooking oil, they can see the price of soybean oil being traded. They understand that it's going up or it's going down. When it's a more complicated product like a Healthy Choice Power Bowl, and you might have 6 different types of food in there, from rice to chicken to vegetables, et cetera, then we've got to break it down commodity by commodity and show the net increase and show the justification. So it's a very transparent, fact-based conversation so that there's no mystery involved.
Are there any other concessions that they would ask you for in exchange for price hikes? Like, would it be more promotions or things like that?
Yeah, that's a question that we've gotten a fair bit lately. Will we see an increase in promotions? And we have not seen that, nor we experienced that yet. We are already promoting pretty consistently in line with where we were pre-pandemic in terms of promotional frequency. It's part of what we do. It's not a very big part of what we do. And we don't really have plans to see that change. There are some seasonal promotions, holiday promotions as an example, that were cut back on during COVID when we and other companies were supply constrained.
Yeah.
Those still have some room to bounce back. So for us, it's holidays, it's like Lent around Easter when we sell a lot of fish for consumption during Lent. Those promotions kind of have been tailored back because the supply chain has been so strained. And the supply chain is making progress. It's not all the way back, but that is another reason why I don't anticipate retailers wanting to do a lot of promotional activities that's going to drive a ton of volume movement, because there may not be the supply to keep it in stock on the shelf.
Yeah. So, but you are back to promotions that you had pre-pandemic.
Yes, and for us, those are high ROI strategic promotions. They're not deep discount deals.
Okay. That's kind of what the old Conagra was.
That was 10 years ago, yes.
Yeah. So Albertsons and Kroger are hoping to close their mega merger early next year. Do you have any thoughts on if the deal gets done?
Well, they're 2 very important customers to our company,
yeah.
and we have wonderful relationships with both of them. I think culturally they make a good fit, but I don't get any votes in terms of whether or not that deal gets finalized. We will be prepared to continue to offer great products to no matter what the outcome is.
Do you think further consolidation in grocery puts you at a disadvantage? It's another mega buyer with huge amounts of leverage.
Well, I think, that is, when you're a company with the scale and scope of Conagra, that's not a particular concern, because, when I think of our retailers, what I think of first is their shoppers. That's who we are ultimately serving.
Yeah.
The people in their stores that fill their baskets with our products. And those consumers want Conagra products. They want frozen products, they want snacks, they want cooking aids like Pam cooking spray. And so these retailers need those products in order to keep their shoppers happy. And that's why scale and scope on the manufacturer side of the equation is very important.
So you're not too worried?
Well, I'm always focused on making sure our customers are happy with us. But we've got a portfolio of brands that resonate strongly with consumers. And when that's in place, everything else typically takes care of itself.
Cool. So the economy is in a shaky place a little bit right now. Is there anything that is particularly worrying to you?
Well, we've actually been the beneficiary of the macro dynamics of the last couple of years. First, it was COVID, which drove people into their homes and led people to prepare foods more and cook more and eat more in the home, and they bought our products. So our baseline of sales went up. The question for many was, will that revert entirely? And it has not. And it has not in part because the inflation supercycle has inflated the cost of everything. And that means consumers have to trade down to make their budgets work. And one of the most significant trade downs that they continue to make is the way they spend on food, and trading out of eating away from home and trading into eating at home. So that has been a persistent tailwind for our industry and for our company, and it continues to this day. And with a potential recession on the horizon, that will just continue to support the foundation there.
Yeah, definitely going to come back to some of that. We have 2 audience questions. One is, where in your product line are you focusing on innovation currently?
2 areas are central to our company strategy, and we set out to do this about 6-7 years ago, and that's frozen and snacks. Frozen and snacks currently represents a little over 2/3 of our retail business.
Yep.
And we started with frozen back in 2015, and we said this is a temperature state that makes a phenomenal amount of sense for our consumers. All it is a temperature state, but the quality of the food at the time was not where the consumers wanted it to be. So we set out to completely elevate the quality of food and the quality of packaging in the frozen section, which is vast. And we have single-handedly driven massive growth in frozen single-serve meals, which is one of the biggest areas in frozen. So we've got a lot of work to do left in frozen, but innovation has been the secret to modernizing brands like Bird's Eye, Banquet, Marie Callender's, Healthy Choice, Hungry Man, Gardein, and on and on. And we've got more to come there. The other area is snacks.
Yeah.
Americans love their snacks. And interesting thing happened with COVID is Americans they're getting their entertainment at home now. Everybody you know is streaming something, they're binge watching something, and when they do that, they're eating popcorn. And one of our best snack businesses is a $1 billion popcorn business at retail with a number of brands like Angie's Boom Chicka-Pop, Orville Redenbacher, Act 2. And that business has been on fire, as it has our meat sticks business, Slim Jim, which of course everybody knows, our hot cocoa business, Swiss Miss, and our seeds business. So our snacks business continue to thrive. But innovation is really the lifeblood of frozen and snacks, and really the catalyst for growth overall in our company.
Are there any tastes that you expect consumers to gravitate more towards? Is it like spicy or Asian or Indian? What is it?
You know, that's a great question, and if we use popcorn as an example, it kind of lays it out. As we try to build a profitable business model, our goal is obviously to maximize incrementality. So when you think about popcorn, sometimes people ask us, why do you have multiple brands in popcorn as opposed to one brand?
Yeah.
The answer is because consumers want variety in their popcorn. So if you look at Angie's Boom Chicka-Pop, Angie's is really about kettle corn and doing kettle corn really, really well. It's the best kettle corn you can buy, and that's where we focus it. If you look at savory and flavor, Act 2 is a phenomenal brand, and we've got a new ready-to-eat Act 2 coming out with butter lovers and spicy nacho. And you know, that's really for powerful savory flavor. And then if you're looking to pop your own kernels, we've got a great brand like Orville Redenbacher, which of course are the best popcorn kernels in the world. So in order to maximize incrementality, we're using different brands to do different jobs for consumers, and that turns out to be the best business model.
Nice. So the other question is, are you encountering any issues with failed innovations or forecasting errors that led to excess levels of inventory?
Well, with respect to innovation, you're always going to have misses. You never are perfect in innovation, and that's okay. And the trick with innovation is to recognize you're going to fail sometimes, and you want to fail fast and fail cheap. And we've gotten pretty good at that. So, you know, we've got many more hits than misses, but some of the stuff we're not going to work. And I think culturally, the key for me is to make sure that my team does not get risk averse.
Yeah.
Because with innovation, it has to be incessant. You have to keep it coming. Forecasting is an area we've made tremendous progress. So we've invested mightily over the last 7 or 8 years in order to bring the tools in that allow us to see demand signals at the point of purchase real time and adapt our forecast, our manufacturing, the way we build inventory. And we've driven a lot of improvement in our forecast accuracy, and that shows up in the financials. And that's been a real area of progress for us.
Can you think of anything that just didn't work that you'd like to share?
Innovation-wise? We've had a few. A lot of times you get into the discussion of, do you build new brands or do you buy new brands?
Yeah.
And when I joined the company, we said, you know what, instead of answering the question, let's do an experiment with both. So we bought some new businesses like Blake's All Natural Foods and Frontera Salsa and things like that. We also tried to invent a brand, and we called it Wicked Kitchen. It was a frozen product. It was really cool packaging. It was great food. But what we learned is, if you have great brands, big brands on your own, or the opportunity to bolt some on from the outside, it's much more efficient in terms of creating consumer awareness and affinity for your new innovation than to try to build something from scratch.
Yeah.
The cost of acquisition from starting a new brand from scratch is incredibly high. So Wicked Kitchen turned out to be a great learning experience, not such a great market execution.
Got it. So back to the economy, are you seeing consumers trade down within your portfolio at all, going from like Marie Callender's to Banquet?
Yeah, so here's how to think about trade down. Pricing is up across the board because of inflation. No denying that. Companies have to take price in response to that inflation. That is what happens. They'll go in, they'll talk to their customers, they'll raise the prices, and then the consumer will see the price, and there's some period of adapting to the new price. We call that consumer reaction to new pricing elasticity of demand. The elasticity of demand that we've seen in food has been very muted compared to historical norms. Why is that? Well, in large part, it's because consumers have already traded down within food. They've already reduced their away-from-home eating investments and shifted it to in-home. So the consumer feels like they've already made a trade-off, they've already made a sacrifice, and in many categories, they do not want to go scorched earth all the way down to the lowest priced store brand solution. So we haven't seen a lot of interaction with private label. In part, that's because of the categories we're in.
Yeah.
We are not in a lot of highly commoditized categories. We used to have some of those, and we divested our way out of them. Cooking oil comes to mind, peanut butter comes to mind, liquid eggs come to mind. Those were all categories that we were in, that are highly commoditized, a lot of interaction with store brands. We're not in them anymore. We don't have a lot of interaction with store brands, so we just haven't seen trading down out of products like Marie Callender's. To the contrary, we've seen trading into products like Marie Callender's from away from home purchases, and that's why demand has remained elevated.
Do you view a McDonald's or a Burger King as a competitor because they are like a low-cost treat for a family the way a, like family-sized Marie Callender's chicken pot pie would be?
Well, it's a potential substitute, and consumers are going to make food choices. They can choose between away-from-home options or at-home options, and the key from our lens is we want to provide a superior relative value to the other alternative, and that's what we do. And the proof is in the pudding. If the consumer is concluding that let's say a food manufacturer in a grocery store is offering a better value than an away-from-home option, you'll see sales act more robustly there. And we have a food service business as well, and that business got hit, as did everybody's during the beginning of the days of the pandemic. It's rebounded nicely, but overall eating occasions still remain more elevated at home than prior to the pandemic.
Also, I'm sure like people are eating or working at home, so they're eating lunch at home, and you have a lot of...
That's a very good point. There's a structural dynamic to why the stickiness of demand that we experienced in the early days of COVID remains elevated. And a big part of that is people working from home. And if you think about it, if you're going to spend your day at home instead of in the office, odds are the breakfast and the lunch that you're going to have is going to be a product like a Healthy Choice Power Bowl. Exactly.
All right, so we have a ESG question. What are the key sustainability and or ESG trends most impacting Conagra right now, and what's the company doing to assess them?
Well, we've got a tremendous ESG program. In fact, I would point everybody to our citizenship report, which will be published in the next few weeks. There's a lot in there, and there's a tremendous amount of good that we are doing right in our own backyard. One of the biggest things that we've done as a company, even predating when I joined the company, is making sure we're doing the right thing for our communities in trying to stop hunger overall. We do a lot of environmental stuff. One of the areas that we've gotten a lot of questions about recently are cage-free eggs, broiler chickens, things like that. And you'll see this in the report. We're making tremendous progress. We'd been in a position where we were committed to going cage-free by the end of 2025. We're actually ahead of schedule. I'm hopeful that we'll hit that by the end of 24. And on things like broiler chickens too, that we've learned are important to our investors and our consumers, we make sure every supplier that we've got complies strictly with our code of conduct and follows the types of conditions that we're looking for things like broiler chickens. So within the next 3 weeks, it all comes out, and there's a tremendous amount in there. I'm really proud of the company for the work that's being done.
You're also rolling out plant-based fiber bowls for some of your meals. Is that something that we can
That's
see
one
more
of the things you'll see in there. Is a while back we made a commitment to getting out of single-use plastics in our frozen meal business, and we innovated one of the coolest packages in the food industry in our frozen single-serve meals. And we started with one of our brands, but it was so popular with consumers that we've now moved it to just about everything we sell in our frozen meals business. And it's basically a plant-based, compostable package. It looks like butcher paper. It's very natural looking, very organic looking, and consumers love it as an alternative to the typical black plastic tray or the old tin trays that you used to see in the old days.
Are you getting a lot of pressure from investors on those sorts of topics?
Well, the good news is we've been a leader there. So, before things like that were ever a hot topic for our investors, we were already making those investments and, way ahead of our competition in that space. So I think the key for our company is that we do not get complacent. We have a refuse to lose mentality at Conagra, and we might be doing something great one year, but that just creates a higher base that we want to clear the following year.
Got it. Okay, so another ESG question. With climate change potentially altering agriculture supply chains, how do you view that risk and hedge against it?
Well, it's something that we have to work with our suppliers on because we don't grow a lot of our ingredients. We buy ingredients. So the folks that supply us the stuff that we buy are thinking about topics like this every day and making sure that they're doing everything they can that's in the interest of the environment overall, as well as coming up with alternative solutions that might be friendlier. And so you're seeing that right now. If you look at the proteins we sell as an example, we have plenty of meat-based proteins in our products, but we also have plant-based meat alternatives like Gardein in our products. And that's been a real ESG area of interest for a lot of our consumers and our investors, as well as just a dietary priority. So there's a tremendous amount of work going on there. Our procurement team does a fantastic job working with all this network of suppliers that we've got, so that we're making sure we're A, aware of all these issues, B, aware of all the things we can do to contribute positively to them, and also keep the enterprise running efficiently at the same time.
Yeah. As a massive buyer, you probably have a lot of sway over how the farmers farm and can, not throw your weight around, but kind of throw your weight around, right?
Well, the relationship with farmers is they're long-standing, deeply seated relationships. So, and our farmers are always looking to do the right things. They're incredibly technologically progressive in terms of being able to grow more food more efficiently every year. After all, collectively, we as a group provide an essential service to consumers. We keep people fed, we keep people nourished, and and doing that efficiently is really important, as well as doing it in the optimum way for the environment.
So you mentioned Gardein. There's been a lot of enthusiasm for plant-based meat lately, but we're kind of in a shakeout. What's your view on on plant-based meat and where we're at?
Well, I think to understand the plant-based meat alternative current state, you have to look at where were expectations set. The innovation of plant-based meat alternatives was very appealing to consumers and to customers alike for a whole multitude of reasons when it first came out. And what was interesting is there's always been the vegan and vegetarian market, but what we learned is that many meat-eating consumers had a desire to reduce the amount of meat in their diet. So we call those consumers flexitarians. And they might eat meat 6 days a week, and they might say, hey, Monday is meatless Mondays. So it was something that more and more, a very large constituency of consumers wanted to partake in. And when the innovation came out with the burgers and chicken, all the stuff we sell in Gardein, people were very interested. And the market started to set expectations. And they looked at categories like milk and said, well, how big is non-dairy milk as a function of the total meat market? They set an expectation, and it was off to the races. What I think you're seeing now is a lot of the expectations for that market were in the food service arena. Yeah. How big can plant-based meat alternatives be in quick-serve restaurants and customers like that? That's never really been our focus.
That's true.
We have Gardein. Our priority has been the frozen section of retail. We have a limited amount of capacity. We've had to add to that capacity because of our growth. And we've seen no shakeout in that business. Our business versus 3 years ago, and Gardein is up over 30% this past quarter. So our growth remains incredibly robust. Our innovation pipeline remains robust. And one of the reasons why it's working so well with consumer is the product taste has gotten better and better and better. So food service might be having a bit of recalibration in terms of how big is that market, but that's never really been our sweet spot with Gardein. We're focused on the frozen section.
You also do plant-based seafood.
Yes.
A few products. How are those? Are those fast growing? Are they catching on? Are people
Yeah, they're
more...
growing, and you know, the big volume movers, not surprisingly, are beef and chicken. And so in beef for us, it's actually our beef crumbles, which people can make taco meat out of. That's the biggest mover. And we have this incredible line of Gardein Ultimate Chicken, which is just fantastic, tastes like real chicken. We have Gardein crab cakes, believe it or not.
Yeah.
And they taste like crab cakes. I mean, they're amazing. They're always going to be smaller than beef or chicken, but they are growing. And it's really, you know, between crab cakes and fish, it's a pretty interesting choice to add to the mix.
Are you investing in anything like a fermented protein or cultivated meat from real animal cells, things like that?
You know, fermentation is one of the technologies that the plant-based meat alternative industry does use to innovate products. That is definitely different from the meat cell type of approach, where you're basically growing meat instead of building your herd in the field. So we don't do that. The meats we use, we buy from meat suppliers, and then the Gardein product we make ourselves, and we have an incredible team of culinary experts that continue to make that product taste great.
Got it. Okay, so another audience question. As more consumers seek out discount retailers like grocery outlet, I'm guessing that's, I haven't heard of that, but maybe also like an Aldi or Lidl, to help mitigate rising food costs, how is Conagra thinking about that space?
Well, the way we think about it is we have a very diverse group of customers that we sell to. We sell to high-end retailers. We sell to the dollar channel as well. We sell to mass merchandisers. We sell to club. We sell to convenience stores. We sell online. So we have an incredibly diverse group of customers, and we have an incredibly diverse portfolio with a lot of scope. So we have different brands that play in different places in what I'll call the good, better, and best continuum of premiumization. So we have a huge business in the dollar channel today. That business, there's some shifting between channels based on what's happening in the macro environment. You saw that in early COVID when consumers were more comfortable shopping in small stores and some of the bigger stores lost some share. You've seen some of that move back. You've seen convenience stores lose some business during COVID when people got their gas but didn't want to go in the building. And now you see a recession potentially on the horizon, and dollar stores' performance continues to be robust. Rest assured, we've got a tremendous presence there with a lot of great products and innovation, and that's a thriving piece of our business.
Yeah, I figured. But we won't find you in an Aldi or a Lidl anytime soon. Those are mostly the private
Aldi
label.
and Lidl do their own thing in that their own brands is what they focus on there. So that's not really our play, but Dollar General, Dollar Tree, Family Dollar, dollar channels like that are great customers of ours.
So I wanted to ask you about Slim Jim's TikTok. It has 4 million followers. Yes. I think that's the only one of your brands that's really like taken off on TikTok. Why did Slim Jim work on TikTok, and has it led to more sales?
Well, Slim Jim is a social media phenom.
Yeah.
If you look at the followers of Slim Jim in the whole social realm, it's remarkable. It's well above much larger brands that you would think of as being much more significant in the social media realm. And that's the byproduct of many years of cultivating a fan base in the social realm. We have a group of users who call themselves the Long Boy Gang. And they are, I don't know the number off the top of my head. You can see them online. It's a massive amount of passionate Slim Jim followers, and they are constantly spreading the gospel of Slim Jim and getting people to look at Slim Jim differently, try our innovations, and it's led to one thing after another in the social realm. It's a remarkable brand.
Do you pay the Long Boy Gang, or are they just
no? They are advocates based on their own passion for the business. So they are ambassadors of all the Slim Jim goodness that's out there, and they do an amazing job.
Do you send them free products?
Well, we do a lot of things to keep the Long Boy gang excited. One time we created a Long Boy gang specific Slim Jim product, and these things go viral. Everybody wants to get their hands on them. So there's a lot we can do there. In fact, I would tell your listeners to take a look at our Investor Day presentation from July. One of our senior executives did a whole presentation on the Conagra way of marketing, including what we do in the social and digital realm, and we shared a little bit of our Slim Jim story there.
Okay. One thing we did notice is your spending on Twitter stopped around September. Was there any reason for that? Was it because of the pending takeover or concerns over brand safety, or was it just not effective?
No, we were just looking at the placement of our brands in proximity to other things and just making sure that when our brands show up, they are showing up in proximity to things that fit the values of the brand. So there's no political statement being made there. We're constantly looking at where our brands show up and make sure that our brands are showing up in the environment that fit the values of the company and fit the value of the brands.
So in terms of where people are buying Conagra products, what is the biggest change that you've seen recently? Is it through a order online, pick up in store, Instacart, or what is the biggest change you've seen?
Yeah, in the last 7 or 8 years, no doubt one of the biggest changes we've seen in terms of the way people get our products is the explosion of our online sales. It's over 10% of our sales now. It used to be 1%, 2%. And, that is just, and by the way, during COVID, it obviously increased because people didn't want to go into stores. It's easier to get stuff delivered right to your home or do click and collect. And that's been an incredibly growthy area for us, but it's also hasn't happened by accident. We invested to build capability in our go-to-market online sales organization, and they've done a tremendous job for us.
Got it. One thing that I've heard about from smaller and independent grocers is that they're still on allocation and they can't get the full orders. Is this something that you're still experiencing?
It's the supply chain overall has improved dramatically, but it is category specific. So what we announced in our Q2 call last week was that our service levels have gotten up on average to over 90%. In some categories, it's all the way back up to the high 90s. But there are some categories that are still more challenged than that. And as a result of this dynamic, their inventory levels are not in certain categories as flush as retailers would like. It's one of the reasons why I don't expect a whole lot of increased promotional activity in this environment, because if you're close to being out of stock or you don't have a deep bench of inventory, the last thing you're going to do is exacerbate the situation.
Got it. So you've been CEO for almost 8 years. As you look back, is there anything you would have done differently or that you feel like you overlooked? And are you thinking about life at all after Conagra?
Well, our job is not done. I came to Conagra to help be part of what is arguably one of the largest transformations in food, and it is on track. It is performing well. I think I have the best team in the business and the best culture and one of the best playbooks overall. And so, I can speak for myself and my team. We feel like we are heading in the right direction. We've got a long way to go, and we won't be satisfied until we get all the way there.
And what about your life after Conagra still?
Well, I've always had a life outside of Conagra, even while I've been at Conagra. And, it's one of the things you learn early in your career is you've got to be able to do it all. You've got to be able to be a good leader at work, and you got to be a great dad and husband and neighbor and all that stuff at home. And so, many, many years ago, I tried to learn how to do all of this stuff at the same time, and I feel like I've got a pretty good groove. And so when I think of life in general, it's got Conagra in it, and it's got the rest of my life in it, and I'm going to be quite happy doing that for a while.
Got it. Okay. Thank you so much for speaking with us today, and thank you everyone for watching. That was Conagra CEO Sean Connolly. Thanks for watching our first Newsmaker of the year. I'm Jessica DiNapoli for Reuters.